Please read this disclaimer carefully before proceeding further. Welcome back traders to analysis of DXY dollar index. Thanks for joining me here. My name is Vic. So this is more going to be an update. It's more of an update here, not entire full analysis, but for the traders who are watching it for the first time, I strongly suggest you watch previous week's analysis and then come to this one to get the entire picture. But let me quickly revise what has been going on. You see, if I look at the monthly time frame here, the market has been falling down and it created kind of like a W pattern here, and this is the point of 61.8 Fibonacci level of this. If I draw Fibonacci from top to bottom here, what you will see that this is 61.8 and market reacted to that. Then it went up, created a double top, and then started to fall back down. So right now what you see here is that market is simply going sideways on monthly time frames. So it went up, fell down, went up, fell down. So it's kind of like sideways channel, if you can call it. So if that is the case, then we are approaching, or we have approached, near about the bottom of this channel, and that means that market is ready to go up. But because we are looking at monthly time frame, it may or may not happen almost immediately. This is the first sign of rejection that it has shown on the monthly time frame in January. But because there has been bearish momentum here previously, I was expecting this to be bearish or next candle to be bearish. One of them is supposed to be bearish. Why? Because that's how the market usually works. You see, when there is bullish momentum, it shows the bearish and then alternate. It kind of like creates alternate pattern. So February month can be bearish, so be aware of that. This is what we were expecting here in Jan, and it can happen in Feb because Jan actually did not complete as a bearish candle. And if that is the case, then whatever the gains that market has actually gained, whatever points that it has gained in DXY, can be lost in the month of February. So if you are thinking that the dollar has bottomed and it has started to go up, it may or may not happen. So and the danger is not over. However, that entire media and all of the entire social media and print media, mainstream media, everybody thinks dollar is dead and a dollar is going to go down. Okay, and that actually has created the massive short position in dollar across the world. And if that is the case, then whenever the dollar will find enough momentum, there can be a short squeeze on dollar, because majority of big banks, they have been playing this story said that the dollar is actually weak, dollar is going to go down, dollar has been going down. If you go to social media, everybody is talking about that. So if the dollar starts to go up, then a lot of people will start to close their short positions, and that can actually push the dollar way up. It can come to 94, 95 or even 96 level, which we have been talking about since near about August or September last year. So that can happen. However, it may or may not happen almost immediately because we are looking at monthly time frame. So what we have here is, if we go to the weekly time frame, the market actually started to go up, but it has this level to clear right now on this particular chart, because see, market providers actually give us different kinds of feeds. So using this feed, on this feed it says that it has cleared this particular resistance area, so as to say it has cleared that, it has closed above. So chances are that it will continue to go up. But on monthly time frame, it still has a possibility of creating a bearish candle, which did not happen in Jan. If it had happened in Jan, then Feb month would have been bullish, but now there is a danger that it can come down. So if you are looking for a strong move up, don't do that. Follow the market, watch the market, what market is telling you, and then only try to take any positions in there. If you go to the daily time frame, on daily time frame, what we had was inverse head and shoulders. This is what I posted in our group, and also on here on TradingView and YouTube as well. So this is inverse head and shoulders, and market has actually broken the neck. Now it has come back to retest that neck. So right now this candle is kind of retesting the neck of this inverse head and shoulders. If this neck sustains, then we can look for further movement up. Otherwise it is going to form an M pattern and it can fall back down to near about this level. Okay, let's look at on what I envisage. Now on what I envisage, market is obviously bearish here and this is bearish here, but you see what a curve is still bullish. This is still showing me a bullish sign. So what we have here is that if the market starts to go down, let's look at the bearish scenario. If the market starts to go down, then the maximum it can go up to is near about 87.7, near about that level or so. Okay, because that's the previous target given by this condition, and it's a multi-year signal that was given by Vata. So 87.76, that is a possibility. Last one was already met here. So that's one thing. This signal has already met its profit target. So the bearish scenario is that if the market starts to go down, then 87.76 level is going to be the worst case scenario for dollar, and I'm expecting that market will touch and almost immediately start to go up, and that's what we can probably see in 2021 if dollar becomes even further bearish. If I go to the weekly time frame, this is what we saw last time. You see, we already had an early warning that the market trend was changing from red to green, and this color was changing from red to blue as well. So that means the market was going to go up, and that's why the market was DXY was going up. We got this early warning near about a week or week and a half ago, and since then the market has been going up. Now if I go to the daily time frame, okay, even before that, when this market will start to go up, what I envisage says that it is expected to ultimately come towards the water curve, which is sitting at 93 right now. If I go to the monthly time frame, that is sitting at 95.34 level right now, because whenever it tries to go beyond that water curve, like whenever it goes away too much away from water curve, this is the line water curve, then it usually comes back to retest it, goes away, comes back to retest. So far it hasn't happened, so it can come to 95.34 or so. So that's monthly and weekly. Let's look at the daily time frame. On daily time frame, the market created these bull targets here, so this one, and both of them have been met. The market actually came there and started to fall down. So if the market continues to fall down, where can it come to? It can come to near about 90.53 level, because this water curve is still bearish and it will try to act as support around here. So far we do not have any kind of color change here, but we can expect it to come to near about 90.53 if it continues to fall down. If I go to the 4-hour time frame, right now market has already been given signal here, which has reached its profit target, and the second profit target is obviously water curve, because that is going to act as support. So what we can expect market to move up on DXY for some time, at least for at least a few hours to maybe a day or so, and then ultimately higher time frame will take in. So always follow the higher time frame and pay attention to lower time frames, but always start your analysis from higher time frame. So that's what it is. Let's go to the 1-hour time frame. The market is obviously falling, and this is approximately going to reach near about 90.90 on this, but there is another level which is pending here, and that's near about 90.83. so that's on 1 hour, and that's quite possible. Obviously if it is going to reach this level 90.53, then it will have to go through 90.80, so it will try to validate both a higher time frame and lower time frame targets as well. But remember, the entire analysis is also saying that this is head and shoulders, and if this neckline is actually protected, then we are looking for upward move, further upward move. Okay, so let's bring in the original analysis that we had, and this is what we are looking for. This is the yellow line 90.91 that I presented to you, and I said if the market holds this, then we are looking for further move up. So the market has been going up, but now it has come back to retest it. It needs to hold that level. It can fall back inside, that's fine, but because it can create spikes and all those things, it can come back inside. But if the market goes back above 90.91 after that and starts to move up, then it is expected to reach near about 91.91 and then 92.48, near about this FCP zone, and then after that we are looking for 94 area or something. But we'll have to update this analysis based on the market conditions at that moment in time. On the bearish side of things, you see there is another M pattern creating, which actually did not work out because obviously the market actually went up here. And we always look at both bullish and bearish sides of things. A trader or good analyst always looks at both sides. Never try to, I mean, you can have your own bias, you can have some kind of prediction in place, but you always prepare for the both sides. Okay, and if you think that that is the wrong thing to do, then you cannot trade. You look at any, you study all the analysts, and they will always look at both bearish and bullish sides of it, because they know the market can do anything, and as a trader they can make money on both sides, whether it goes up or whether it goes down, irrespective of their own bias. Even if, let's say for example, you think that the dollar is going to go up, I'm just taking an example here. If you think that dollar is going to go up and that's your bias, and you are thinking of actually taking long positions, but you must still do analysis on the bearish side of things, because if the market starts to go down against you, then you need to know the levels where it can go up to. Maybe those levels can act as stop loss levels for yourself, or act as new opportunities to buy the dip or sort of thing. So always do the analysis on both sides. Okay, so that's why we always look at the bearish side of and bullish side of things. So if the market starts to fall down, then these levels are still there, and we have looked into other levels using Vata and Visage as well. So hopefully that should actually give you a good indication where the dollar is heading to. Overall, my bias is still bullish. I know that the market is very bearish, and that actually itself is an indication that market is expected to surprise at some point in time most of the traders, because at any moment in time it can start move upwards. People who rely on court reports, or like the CTFC, I think the report they're called, let me tell you one thing about them, is that they are always delayed. They are delayed by near about a week. So if you are actually looking at those reports, they can be manipulations in them, because they also know, even hedge funds and other guys like commercial players, they also are aware that retail traders are looking at their reports. So what they can do is they can just put their positions in there, and by the time the report will reach you, they can close their positions off, or they can they can change their positions heavily. So it can surprise you at any moment in time. So that is why always trade what you see on the charts never lie. If this candle is forming a bearish candle, that actually tells you that the market has sold off. That means the bears were in control. Doesn't matter what report or any report was telling you. Okay, so hopefully this was useful to you, and if it was, then hit the like button and put in a comment below the video. This helps us to actually rank better in YouTube and reach out to many traders, and this is what you should do to support this channel, and it motivates us to come up with better content, and give you this free in-depth analysis, quality analysis every week. So please make sure that you hit the like button and put in a comment below the video, and it will help us a lot. I'll see you in the next one. Thank you. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you will be able to see the testimonials of previous students, and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.